Good morning. Thank you very much. I actually, after this session for us, I now understand why Phil Cotter quit on Monday morning, because there are very few people who can actually follow Anthony's act. Anthony, I can't see you. Where are you? Over here. Raise your hand. Don't run up. I have something for you. Yesterday, you raised a very interesting question. 175 years of credit information, actually the birth of Dun & Bradstreet. I think I'm not that old, but I remember a lot of what was going on at the 150th anniversary, etc. And the question was, if we look backwards from 175 years forward, I see nothing different than what happened 175 years ago. What happened 175 years ago, it gave birth to an industry which is called the business information industry or credit information industry. What propelled that development? Well, it was technology. Steam engines created new businesses, created massive enterprise, and the historian actually said in a very famous book, it created an enterprise which was shrouded in anonymity, and it was entrusted to management which heretofore had never managed such enterprises. It led to a new legal form of the limited liability company, and that's when you needed transparency. Another trigger part was there was a massive crash, a massive financial crash, which actually forced businesses to look for information about their business partners. So now I'm going 175 years hence, forward, and I look back. What happened? I think nothing changed. Technology is changing our business. We now have new forms of enterprises which before never existed. E-commerce. A lot of people remember Sears and Roebuck and mail order houses, and they missed the boat because they didn't adjust, and they actually should be today in the e-commerce business, and they're not. They're gone. And so we have a new form of enterprise. We have new management who actually managing enterprises which they never managed before. And another part, we have regulation. And regulation in form of compliance. We didn't have that before. So that's my answer to your question of yesterday. I see a thumbs up. Thank you very much. Now to these gentlemen. I actually try to separate them, and I want you to separate. I want this gentleman in the middle, please. Please. You didn't listen to my instructions.
I was just nervous of sitting near your champion.
A good one. The reason why I separate these guys, because they work for each other. And so that they probably will cuddle up to each other. And we will leave poor Anton out in the cold. We can't have that. So now, our founder member or co-founder member, Outsell, which is an information consultancy in the United States, and is covering actually the global information scene, issued a report not too long ago and said that the business of compliance was about $21 billion, and that was the end of 2015. And the reason why I asked Phil Cotter of Thomson Reuters, actually Phil used to be a director of BIIA as well, and he brought in Thomson Reuters governance, risk and compliance division into BIIA, and their business is about $600 to $700 million, so there would be the proverbial elephant in this room. And I thought it was good to mix them with some new businesses. So Phil chickened out, so here I am, and I am not a match for Anthony. So let me start up here. You are relatively new in this compliance business. You are actually, you were in the business, but now you're in something called onboarding. Is that something, basically, is the new glorified term for compliance? Or is it what business? Or is it part of a process?
So my sense is that all that's changed is events on the planet. People are always on board with customers, and people used to make risk-based checking using traditional information providers to understand who those companies or those people were, and to understand the risks that they were encountering by taking them on as customers. The process has changed because regulation has increased, because of fraud, because of terrorism, because of a whole number of different reasons, largely to do with money laundering. So processes become more complex, but the process has always existed. So I think what is happening now is just people have had to expand the amount of information that they consume and the detail in which they run the process.
Yeah, from our understanding, the onboarding process starts from the very beginning, even before a client is on the books of the enterprise or company. It starts from the point when the sales approach is made to the marketing, to documenting the information on the subject before making them a client. And in our line of business, this is today addressed in the way of electronically being done seamlessly in real time, verifying the client's identity, confirming the identity electronically, and providing that service to the client in a very fast and secure manner.
Yeah, thanks. Can you hear me okay? Good. So, I think Paul's right. I think that nothing's really changed other than the compliance that you need to adopt if you're an FI. If you're not an FI, you don't need to adopt the same compliance around KYC. But I always go back to what's changed around KYC and why is compliance the way it is today. And you know, then I kind of add a joke to this, which is in London we always say you're never more than 10 feet away from a rat. Okay, you're probably never more than 10 feet away from a criminal, and in this room you're probably never more than 10 feet away from an ex-DNB employee. There are three on this stage, and Anton isn't one of them. So you know, so if this is true, why are we in this game? Why do we do what we do? We have to believe something. You know, and DNB, and actually Anthony was talking about this earlier. DNB have got this saying, and they drilled it into everybody. And I still wake up at night sweating. What do you have to believe that? And I ask this question all the time. What do you have to believe that compliance is worth the time? And this is what we need to ask our customers. What do you have to believe that compliance is worth the time? And you have to believe that, and I'm going to read them out, because this is really, really important, that modern slavery isn't a good thing, that forced prostitution should be got rid of, that child exploitation isn't something that we should adopt, the drug trade shouldn't be something that we should look for, illegal arms trade, environmental dumping, terrorism, bribery, corruption. These are the things that our industry is now challenged with. It used to be simple trade credit. We used to prevent the wrong uns from not paying their bills. Now we prevent this other list of things. So it's not just trade credit. So what do you have to believe that compliance is a good thing? You have to believe that those things are wrong. Now, I heard the phrase this morning that we have to educate the legislators. Actually, that's not true. Okay? The way the legislators come at this is that they come at it in a way that says, how do we fix that problem? And then what they say is, now you're the innovators, go innovate. And I think that's what we are doing as an industry. We are innovating. And some of us are technology companies and some of us are data companies. And we're trying to fix this problem to take the friction back out of the onboarding process. So, of course, compliance adds friction. Easy, no friction, don't have any compliance. But then you have that list of other things. So, worthwhile problem trying to solve. Of course it brings in friction, but then it's our job as innovators to ensure that friction is taken out.
Well, that's an interesting assessment. So, I'm always interested in what drives demand, what drives a business, your business. You just said two things. One is crime is rampant and it needs to be fixed, and somebody needs to manage it from an information point of view. Compliance. The other part is regulations. So there is the legislator, but then there is the regulator, somebody who oversees this. So are these the main drivers of your business, your main interest of being in this business?
That's an interesting question, and I think John's point is very well made. I think it links back to what Joe is saying, that actually I believe that the regulators, with positive intent and as much information as they are surrounded with, are trying to help all aspects of industry deal with the problems that John has just listed. What do I believe is we all, whether we're information providers, i.e. direct information, or technology providers of information, just need to understand process and do it better, faster and cheaper than it's done before. Because that's really what's going on. People want to trade with each other more quickly, but they want to trade, as I would describe as accurately, dealing with, one could say, with what the legislative regulators are telling people to do, or if we want to embrace the point that John just made, deal with some of the issues that are going on in the world and help solve them. Because that's what the regulators are trying to do. So I don't think regulators are doing anything wrong. I think they're trying to do their very best to solve some big problems.
I absolutely agree with both as well. I think also that if it wasn't for the regulators, and this is something probably now just brought to my mind, that what we do today is not just to provide a service to our clients. Actually, the service wouldn't have been there if it wasn't for the regulators to start with. So it's really the regulators that made us evolve and diversify from what we originally were, credit information providers, to afterwards providing due diligence type investigations and services, to now later on in life we became like verification providers of identity, of KYC checks, online checks. So it's really the regulations that brought us into this line of business, which has existed for many, many years, just natural involvement of the industry. Yeah, I cannot but agree with both gentlemen.
So Joe, it sounded like the question was what gets me out of bed in the morning. Well, when I realised that the career I wanted to follow, which was a professional boxer, I realised that I was too good looking for that. I decided to follow a different career, and
Is this why you lost your head?
yeah, and that career could almost have been written by you, Joe, because I worked for D&B, then I worked for Euler Trade Indemnity, then I worked for private equity, then I worked for D&B again, and then I ran GB Group. And I kind of followed that career. I often wonder whether you are actually my dad, because I didn't know him. But you pointed out that all your real sons, I didn't take that personal, that still had your hair. So I clearly am not your son. But what gets me out of bed in the morning is I like solving problems, and those problems evolve, and the problems are less about pure trade credit anymore, and they're about risk, and they're about the risk and the risk of compliance and not meeting that compliance, and why is that an important thing? I've talked about that. So they're about solving problems. It's not about the technology. I run a technology business. I don't start with cool technology. I don't care about cool technology. I care about the problems. And then once I've defined the problems, I define what's a great way of solving those problems, and if it's possible. And then I work out how we deploy the most efficient, as Paul said, way of solving those problems. And often it's technology. Sometimes it's modern technology. Sometimes it's not. So, you know, we talk a lot about blockchain. It's a great way of encrypting data and distributing databases. Actually, there are better technologies to encrypt databases than blockchain. So there are other crypto technologies out there that work a lot better. So it's about what problem are we solving. It's not about the buzzword of what's cool. So I like getting out of bed because I like solving problems. Joe.
Wonderful, wonderful. So am I. And in Asia here, a lot of people call me Uncle Joe, and I was never called that I was your father. But I take the compliment because
Let's keep denying it.
yeah, we all started at BNB when we were in the paper business. Remember?
I keep promising that I'll always shake my head when I come to these events so no one realises I've really got hair.
Thank you. Well, let me move to we have this conundrum. On one hand, the regulator says you've got to do due diligence. And we have to identify not just businesses, we have to identify beneficial owners and particularly people who are hiding and actually controlling enterprise. I was, the other day, I had to go find a new accountant because my accountant retired. And I had to appear with passport, my birth certificate, and I was being onboarded. My wife had to come too. And so it's not just the business, it's the individuals who become. Now you're in a particular area in the Middle East, and how can you get information on people who don't want to disclose?
Yeah, our region is actually known for not having information easily accessible, but the fact is it has got information because it's the same as any other part of the world. It's based on, all these countries are natural countries, they're based on constitutions, they all have laws and commercial laws that insists on entities when they are formed to have legal information filed at registrars of companies. They all have publicly available information on individuals. It just means of somebody accessing that information, being able to obtain that information, be able to transform, like Anthony used the word yesterday, because our line of business involves transliteration, transformation, normalization, deduplication, and all the rest of it, all the fun that we have with data usually. So this is basically it's in my opinion, it's a misleading concept that there's no information from our part of the world. There is information from our part of the world. Perhaps there's not enough financial information in our part of the world, but KYC type of information, ID verification information, it is information that's available, and we have, like I said earlier, we have evolved to be able to provide this information the same as anywhere else in the world, electronically in instant manners. When it comes to filing financial information, this is a joke that we shared earlier. It's in fact, it's a question that sometimes there may be not financial information available, but there could be also several financial statements available from the same entity too. So there could be one financial set for the local governments, there could be a financial set for the credit information providers, there could be a financial set for the business partners or the wives or the rest of it. But what we do is we basically we collect information from public data. So our ultimate source is always the official registrars of companies, and for individuals, when it comes to it, publicly available data from, again, commercial registers of companies, as well as voters' records and the rest of it. We are in a part of the world where we kind of have one foot in one side, like in the Middle East, and we have offices in Cyprus, where it is considered today as an EU country. So we understand GDPR, we know the regulations around it, we understand data protection and so on, but we also we are able to obtain information in parts of the world where there is a lack or non-existence of data protection in some areas. For example, I can give some countries as an example. Saudi Arabia and Egypt being two major economies of the region, they both lack data protection acts or legislations, or a single regulator that basically oversees the data protection for the whole countries. That doesn't say that they don't have any data protection of any kind. They do have, under their own constitution, which actually follows Sharia law. So there is a point there to be taken, and certain information cannot be made available. The UAE is another country where they don't have a federal or national level kind of a regulator for data protection, but certain free zone jurisdictions, as they have in that part of the FC, the Dubai International Financial Center, has its own data protection law, which is in line with the GDPR and the UK's Data Protection Act. And then we have Qatar, for example, in 2016 have passed data protection law, which applies to local companies operating locally, so that affects local banks and financial institutions. You have a country like Lebanon, where we have offices there, and this is quite a funny one, because in 2005 there was a bill that was passed to Parliament for data protection, and it's still sitting with the Parliament since then. It's not been passed. We do things slowly.
Thank you. Coming back to this balance sheet issue, 3 balance sheets, and some time ago, it's a couple of years, the Kingdom of Thailand decided to computerize the corporate register, and all the balance sheets people had to file as part of their disclosure as a limited liability company. And our member BOL, I remember, performed this task very well, and the bankers wouldn't buy it. And the banker said to me coldly, well, they come with their own balance sheet, so it's a different balance sheet. And I said, why don't you use the official one? Well, we have the better information. I said, you're wrong. Now you've got 2 balance sheets, and now you can ask questions. Why is your ratio equity this? Why is your profitability lower? Why is it higher in order to get the loan? So, oh, you got a point. And this is where transparency comes in. Also, I'm asking you guys a question. There is this, as I mentioned, conundrum that people don't disclose, and we need the information in order to help your clients, to make a decision in real time. Somebody said this morning, if I heard correctly, sometimes it shouldn't be real time, but may last 4 seconds or maybe 4 days. How do you manage that? Starting.
Yeah, okay, so we're talking about KYC, so we're not talking about balance sheets and risk. That's a different thing. We're talking about different type of risk. We're talking about, does the entity exist? The entity being the individual or the business. And a business is also legally in most jurisdictions an entity as well. So does the entity exist? And if it exists, who owns it? So what's the ultimate beneficial owner of that entity? They're the problems we're trying to solve. And I guess, you know, the ways of solving that are the ways that we've always solved that, which is you have to have 2 + 2, which is the old A&L approach of solving that problem. So there, as everybody knows, there's CDD, which is customer due diligence, and EDD, which is extended due diligence. So the question about should it be 0.2 seconds or should it be 4 days is really down to, is it CDD or is it EDD? And also, we're used to, in our industry, cannibalization of pricing. Well, actually, cannibalization of pricing in CDD and EDD is less relevant. So CDD people probably don't want to pay much more than a credit report price, but in EDD, the average price, well actually, does anybody know what the average price is in EDD? Put your hand up if you know. To verify an entity. It's about $1,500. That's what a bank or a FI is prepared to pay. So, if you could get $1,500 for one of your reports, you might be quite happy, right? That's not cannibalization. So, actually, EDD is such that it is acceptable to take, as Anthony says, 4 days, or 5 days, or even 2 weeks. So, it depends on the risk that you're taking. And this goes back to not dissimilar to credit risk. This is why you guys in here will be and are the experts on the new world. It's probably why you shouldn't call yourself credit rating agencies anymore also as well. Your business information. You're helping businesses make decisions. So if it's EDD, then it's more about workflow. The technology that we deploy, the information that you gather is about workflow. It's about pulling it from as many sources as possible to get as clear a picture as you possibly can. And that's where the technology comes in, that's where the enablement comes in. And when you go back to the 2+2, that means it probably comes from more than one supplier. Almost certainly, it has to be triangulated, and you'll hear that term a lot, triangulated between a number of suppliers. So don't think you're going to rule that market. You're not. But it's important because actually there's room for at least 2 or 3 players in each market. So how long does it matter? It doesn't matter. It depends what you're trying to do.
If I can add to that as well. My background is also credit information, and I've been in this line of business almost 26 years, probably not as much as some of the people in this room. So back in the days then, we used to do a credit report, and it used sometimes take us 25, 30 days to compile the information on a company and to deliver it to the client. I don't think this is, in today's world, is anywhere accepted, anywhere near that. Over the course of time, obviously, the speed of delivery was more and more to deliver faster and quicker. And then we hit September 11 when there was requirements for due diligence. And this is like a little bit of kind of timeline for our line of business, how it evolved from credit information to post-September 11 started to do a lot more due diligence investigation type work, which used to take around 15 working days on average for a report back then. Today, we do, like John mentioned, we do comprehensive due diligence reports, enhanced due diligence reports, and these are sometimes, they are taken offline. They're not online requirements for some clients, but nonetheless, they still want them to be done within a day or 2 or 3. However, many of our clients in today's world, they want this information available to them through technology, and they want to obtain all of that information from multiple sources right in front of them, and then go away and make a decision that doesn't have to be instant, but they want all of that information made available to them instantly for them to go away with and maybe spend half an hour, 1 hour, or a day consulting around the table, for example, to make a decision on a client onboarding or giving a massive loan to a client or partnering with a business partner somewhere else in different parts of the world where not just financial information is important, but also KYC checks, compliance, not being listed on the criminal list, part of it, not being associated to them by any means of reputational issues either, which relies on adverse media searches, sometimes in multiple languages, not in a single language. And all of this today is available in the technology that can deliver it within a matter of seconds, or maybe a minute or 2, if somebody wants to do a proper enhanced due diligence investigation. But then time is not of an essence so much, and cost too is not much of an essence at that stage.
Thanks for the advert, Anthony. Cheers. Yeah. And that's our technology.
Absolutely.
And my observation on both comments is that the process of what was risk analysis, credit checking, etc., went through exactly the same evolution that CDD and EDD are going through today. So, for those that you have been in the industry a long time, and there's quite a few people in the room, you'll remember when reports took a long time, where decisions took a long time. Customers drove the position to make that faster. So post September 11, when real heavy process came from regulators to start compliance checking, now people have realised that the cost of doing that is too great. Banks having 10,000 people globally, and many do, that are searching multiple databases, discovering information, putting together UBOs, checking perhaps the sanctions list. People have realised they need to do that more quickly and more efficiently now, like every aspect of business. And whether that's in a second, or whether that's in hours or days or weeks, depending on the case and how much they want to spend on it, the realisation is that it must be done better, faster and cheaper, just the same as the credit industry. So I think the evolution is very parallel, but also the information that's available, right, to discover ultimate beneficial owners, family trees as people used to call them, is only something that information providers are able to do. That's not possible without some sort of intervention. So the information that are provided by the businesses that are represented in this room is still as relevant as it ever was.
Thank you very much. It was interesting to hear that you get actually more value out of the investigation than just out of the report. So $1,500 should entice many people to make an effort to do diligence on the ground. We're coming down to the wire. We've spoken more than 30 minutes, and I do want to open up the floor for questions. And can somebody get a microphone to Mr. Ritter? Because I want to ask him a question. Hurry up, you're losing time. Jump. Michael, you mentioned the lie before, and the legal identity identifier, which was promoted by the Financial Stability Board, ignoring all the expertise of the industry, as Anthony explained. Now, one thing we're looking for in the lie is actually transparency. And there is a move afoot, and if I read the regulations correctly in Europe, that share transactions have to have the lie. So who's selling shares to somebody else? Now, if we take that concept onto business and individuals, so if I make a payment from one country to another, but at that point I have to be transparent. I have to give my name, rank, serial number, etc., etc. How fast is this process going? Because I think it would help industry to do onboarding much faster and to do the compliance much more faster and perhaps even more accurate. Michael, you have the floor.
Thank you, Joe, for posing these questions. And indeed, why did you address this to me? I'm the chair of the Regulatory Oversight Committee of the Global LEI system currently. So the question was how to speed up systems. First of all, please let me say that the starting point of the LEI had been the G20 initiative, tasking the Financial Stability Board to develop a system. And it was developed in cooperation with the private sector. So we had a private sector preparatory group, let's say, consulting us in what way we should develop the system. And it came up as a PPP. We lost the people. We got a public-private partnership. so that the LEI issuers itself, that was the idea, come from the private sector and bring in their competences and identification processes. And therefore it's not surprised that we have Bloomberg, for example, on board as one of the LEI issuers. And that GS1 stepped in as well, who provides the barcode. And it makes completely sense to get the producer identified by the LEI and the product by the barcode. We have the same system, and that's your question regarding transactions, securities transactions. We are going to map the ISIN code, perhaps the Fiji or other securities identifier with the LEI of the producer. So to facilitate transparency on who owns whom as well. So we have introduced this year the relationship data, the direct and ultimate parent of an entity. So it is about increasing transparency on structures, and we hope that the private sector brings in the initiative, takes over the system and take the lead in evolving the system in the direction of getting in the KYC tool, know your customer, know your supplier, increase transparency on AML and CTF as well. These are, let's say, business models beyond those I've already mentioned, which are covered by the McKinsey paper currently. And indeed, the question is how quick do we have the data available depends on the operational system of each and every of these 40 local operating units issuing the LEI, collecting the relationship data. And we have LOUs that provide the LEI after verification of the reference data and relationship data within 1 day. Others take 4 days. But, as I said, we have 40 of them. So we expect competition, not on data quality, but on the timeliness of providing the LEI and perhaps also on the price. And the good thing of the LEI is, when it comes to KYC, that the data usage is free of charge. And the LEI and the reference data has the blessing of the G20. And this makes a difference to other identifiers around the globe that are to a certain extent preparatory. So I think this is the key question. Shall we evolve the LEI system into a KYC tool?
Thank you. Any comments or questions from the audience for Michael and for our panel?
Can I just add to what Michael was saying with regards to the legal entity identifier, if I may? Thanks. Yes, I think it's very, very important to have a unique ID number or legal entity identifier, especially in the KYC environment or the identification environment. I'm pretty sure that a lot of people in this audience here use or is familiar with the OFAC, Office of Financial Asset Control of the US. Can I ask how many of us has made a search on the OFAC list at any one point and found, okay, how many made a search on the OFAC list? And how many of you had seen a unique identifier or national ID number on the OFAC list? Nearly none. This is obviously to iterate the fact that a unique identifier is very important to identify the identity correctly before we do any KYC check or any investigation, because we can go on building a whole case of investigation costing thousands, like John said, and not 1,500. We've seen clients spend £10,000 and more, or 10,000 euros and more on a single case, and they don't have a unique identifier for the individuals or even the commercial entities that they're looking into. And coming from the part of the world where we come from, names can be very similar, or names can be translated, transliterated, or transformed to different languages, and they could lose that correct name of that entity. So the whole basis of the investigation could have been unsustained.
Yes, it's also a very Western principle, numbering. You know, indexing is what LEI is all about, indexing a database. And it's a really good idea because of financial instruments and linkage of those financial instruments across different entities. But it does miss the point for KYC. The KYC is a bit wider than that. The KYC is then linking that back to an individual entity. So, as I tried to point out earlier, so it's a bit more complex than that to number all entities, all financial instruments, and everybody in the world. Quite a difficult job. Good luck.
Any more questions? Well, I'm up for coffee, so I hope everybody else. I thank you.
They're bored.
Bye-bye.
Thank you. Thank you.